Hello, everyone. Good morning, good afternoon, good evening. Thanks once again for joining us in this edition of LinkedIn Live. We are doing the LinkedIn Live series with CCNC Solutions. Today, we have an extremely passionate topic for people who are interested on what's happening in the BIAN world. So, our topic for today is on digital agility with BIAN. Now, before I introduced my guest, I would request everybody to post on the LinkedIn chat from where you're joining, because we typically get people from all over the world joining in for this continuous learning and sharing sessions of CCNC Solutions. So I would definitely recommend you, if you've just joined us, from please put your name and your location from where you're dialing in. So we will be happy to take questions throughout this live session. So I want to kind of introduce our panel here. I have Mamta Sarangal and Nishan joining us today. Um, just a little bit of background about our guests, and then I will hand it over to people. We have Ramesh joining us from Sydney, Australia. Thanks, Ramesh. In terms of Mamta is the Chief Architect and Technology Officer with CCNC Solutions. She's over 20 plus years of experience in banking, insurance, and telecom architecture. With a strong knowledge on BIAN practices, technical and functional knowledge, she focuses on projects focusing on quick wins. She has been instrumental in implementing BIAN across North American, Australian, and Southeast Asian banks. And it's been a real honor to have Mamta come here and share her perspectives today. We also have Nishan, uh, who is the global head of banking and financial services for CCNC Solutions. He too has got over 20 plus years of experience in delivering business and technology initiatives in larger organizations, from strategy to business case to leading architecture and implementations. Now, I want to give a little bit of a background. First of all, thanks, Nishan and Mamta, for joining us. Um, for viewers who just joined today, CCNC Solution is a market leader with about 20 plus years of experience. We have a global footprint. Um, we call it as uh, anything around enterprise architecture, eat, sleep, drink. We think you need to think about CCNC. It has been a partner for over 20 years, and we have delivered some of those major initiatives for banks in terms of digital transformation and business transformation, um, with some of the leading banks in terms of upskilling themselves, certification, and implementing across different frontiers. We are also an active member of BIAN. As you know, BIAN stands for Banking Industry Architecture Network since 2020. So we are a contributor to several BIAN working group initiatives, and we are the only BIAN accredited training provider with a global footprint. So thanks, Mamta and Nish. What's the topic? And let's get started off the topic of digital agility. So why did we pick the topic called digital agility, and what does it mean for all of us? Let's first unravel this whole paradigm,
Yeah.
because it's important that we're going to focus on a very specific item on digital agility. So why don't you kick us off, Mamta, on what does digital agility means for organizations?
Yeah. Before I start, Suresh, thanks for introduction. While I was listening to your introduction, I was thinking, letting everyone know that I have 20 years of experience, probably just showing the age of how long have we been working in this industry and how old we are. But
She
that's
started when
absolutely.
she was 12.
No, I'm going to lead. I'll take that lead into digital agility topic now. I
Right.
think it's we sometimes use the word digital, and a lot of time that we use the word digital looks like as if it's something new. But I want to highlight the fact that bank had been digital for a very long time. But the
Correct.
difference between banks being digital to what banks needs to do today is the agility part. Like you
Right.
have to be digital, but you need to be able to change your digital outcome very quickly to meet the changing ecosystem in the financial industry in today's world. So that's why now digital agility becomes very important. That we banks used to do digital, but it was doing digital. But when COVID hit, how many banks were able to quickly ramp up their all digital onboarding aspect of the bank very fast. There were very few who were able to do it. That actually highlighted the fact that the agility is very low in the banks, although we are quite digital, to be very frank. So yes, so that's why that was the reason why I picked up the topic of digital agility and how do we build it in a financial services industry using BIAN is the topic that we want to discuss today.
Awesome. So I just wanted to get people, welcome everyone. Krishna Ganapati joining us from Bangalore, India. We have Anand Vemulapatti joining from Hyderabad, India. We have another user um, joining us from Oyo, Lagos, Nigeria. Welcome. We have Arshad Tanveer from India. So again, different time zones. I and Mamta are joining us from Melbourne. So and Nish is joining us from Sri Lanka. So we have a global audience, global
Yeah.
panelist joining us from things. So let's get kick started in this journey. So why didn't you get tell us digital agility means different things for different people, right? As you rightly said, it's not new. Organizations have always looked at looking at digital part of it, and it's changing dimensions so much. So how do we get this simplified, right? And one of the
Yeah.
part about simplification is I like the part that you wanted to start focusing on three pillars. So get us
Yes.
started on that.
As I said, digital had been there, but then now how do we bring the agility into our digital scope of the bank? That's what we are trying to look for. These are the three pillars that we think, and they actually scope around the architecture, but very importantly in terms of mindset, which is required to be there in the organization to have that agility, and even the methodology part of it. So we can't have a mindset but not supported it by the methodology. It will not be able to deliver it. So three pillars, the way we look at it, is what we need to do, which is the architecture side of it. What's the thinking which needs to sit around it, which is the product mindset around it. And the third is how do we do that, build that agility, which is the methodology part of it. So very quickly, the composable, if everyone would have heard about the word composable, the intention is to build these Lego boxes in the organization, which could be built from a smaller component, but we know they are still a Lego box which could be reused, put together, composed into something more complicated, which a bank is. So the basic definition of composability is exactly the same. This doesn't change. Now we're going to bring the definition of composability into architecture. That's a composable architecture, and the basic concept around it is that we should be able to architect things in a way they are reusable, they are interoperable with each other, and with that we are able to bring together the complexity of the bank that we require. Product mindset is all about thinking about what needs to be done for the customer, what customer is looking for, and how do we build that for our customer. So that's the product mindset. The very important element about product mindset is, again, similar to the agility, is that it is not something static and concrete. It keeps evolving as the need of the customer changes as well. And hence we need to have that the thinking that we are going to keep modifying these products that we have, which we're delivering to the customer, but not forget the fact that it is driven by the need of the customer itself. So that's the product mindset. And Nish is going to talk a lot about product mindset. He's quite passionate about it as well. And the
Well,
last piece is how do we build these products? How do we build this product, and how do we have these products supported by a composable architecture? Bringing the whole two things together is the agile methodology, which I think a lot of banks have now started looking at adopting in the organization.
right. So, Mamta, the question would be you did talk a little bit about composable architecture, right? We wanted to get a little bit deeper around what is composable architecture and why is it important for that digital agility. We understand a little bit about the decomposition part of it, but if you can just run us through a little bit more detail on what does that look like when you talk about composable architecture.
Yep. I'm not going to take credit. Of course, definitely, I cannot take credit of this word composability. It was given to us by Gartner. And in fact, the point that I was mentioning earlier is that it actually coincided with the COVID-19 been hitting and how the banks and industry, actually not just bank, this concept was across the whole industry. Gartner did realize that only organization who had this mindset of modularity in whichever industry they had looked at, only those organizations were able to come out of COVID, are able to react to COVID very fast. So they found that the key ingredient for success in that kind of situation, which was not foreseen, that no one could have predicted it, and still organizations had to react to it. And hence this concept of composability was floated by Gartner. And they didn't just put that composability from technology point of view. They looked at composability at three different angles. They said the business itself needs to be composable. So they needs to have a blueprint of the business, which is able to put together and create a new business model as a result of it. So business needs to think, the business architecture needs to be composable as well. And of course, we are obviously looking at technology enabling our business, and hence the way we're looking at our technology also needs to be composable. So we need to understand what are these building blocks that we have in our technology, which are then supporting our business. And the third part was the thinking of mindset of that everything is going to keep changing. Things are uncertain. We don't really know everything at the start, but we're going to keep building on top of it. With that three angles and minds things in it, they looked at four different characteristics of composability. One was that any kind of composable architecture needs to have first a capability to do orchestration. So when we're building these building blocks, we should be able to think of tying these building blocks together and orchestrate whatever we want to orchestrate. So any business event, even if it's something that is unforeseen, because we know this building blocks, we are able to orchestrate and react and create a new process on top of it. So that's the orchestration part of it. Then comes the discovery part of it, that we are building these building blocks, but we should be able to discover. So it should not happen that part of the organization is building it, but the rest of the organization doesn't know it. So they end up going and building something else. So it should be discoverable, and it should be discoverable not just from the technology, but also the business. Business should know what we have within the whole enterprise as a result of it. Modularity, I mentioned, which comes with the orchestration, and autonomy. So when we build these building blocks, composable building blocks, they should have the autonomy in terms of people, processes to manage it, operate it, run it, and be able to change it as well. So the autonomy should be given to that each of the building block itself. So these were some of the concepts that they brought together to explain the composability and composable architecture.
I like the word like autonomy, because if you look at building high performing teams, and every team today, either they are actually organized by squads or pods, one of the parts is that do you give them enough amount of autonomy to do what they wanted, right? So
Yes.
they can decide whether they want to do Scrum, Kanban, they could do their way of working. So I think it fosters that level of thought process, that a self-organizing team that thinks about, okay, what should I prioritize now for making this change, and give them the opportunity to experiment a little bit, because sometimes it's just first time they're doing it, they're probably learning curve about making this composability aspect of it, picking up a right use case, user story,
Yes.
and looking at the proof of value, and then making it demonstratable to make that work. So
Yeah.
that's quite helpful to understand a little bit more on composability.
Very true, Suresh. Autonomy is very important. The innovation actually comes from autonomy to a large extent. If you give people the rights to experiment, that's where the innovation really happens. So it does make sense.
Right.
Yeah. Okay,
Okay.
yeah. So with along with the composability, the another aspect. Now we talked about this building blocks. The Gartner also coined another word for these building blocks, which they called as packaged business capability. And I absolutely love this word as packaged business capability, because it brings technology and business all together. For the very first point, that it is a business capability, which means that it's something which is of relevance to business, and they are aware of it. That this is what they want to do. This is what they are looking for doing it. But But what they have talked about and extended is this business capability are packaged, which means they are enabled by technology. The diagram that you can see is that what they talk about, this capability needs to be identified and built in a way that the function of the capabilities is encapsulated within that building block itself, which is the packaged business capability. Information which is required for that capability is residing within the packaged capability itself. So it is not something that is external. It needs to be gone out and brought in. The capability, the packaged business capability, has its own information and data set which is required. And then, of course, you are making it enabled by bringing either a user interface or your integration, which could be API or can be an event channel itself. So this hexagonal diagram that you can see, that's the one which is considered to be a packaged capability, which is enabled by the technology. And it doesn't say which type of technology. It could be any technology. Today, you might be using a technology, and tomorrow it might change. You might want to use AI driven to enable that particular capability. That's absolutely fine. As long as the boundary of the capability is very well understood. That's the definition of packaged business capability. So it has to be very well defined.
Well, I like the part that you talked about business capabilities, because a lot of times when we talk with clients globally, we recently had a conversation with a client in Southeast Asia, and they were thinking that it is all about a business process that they want to re-engineer. So sometimes people have this notion that we will want to re-engineer a business process, and that's probably what we want to do it. But I like the way that you're talking about capabilities, and business capabilities means the technology and business together to finally deliver business value, right? At the end of the day, organizations want to use technology, use these best practice frameworks and methodologies, but finally it has to make sure it is profitable growth. It's able to get
Yes.
customer retention. So I think there's a focused on business capability is a very key word that you mentioned around.
Yeah, it's a good point, Suresh, that you highlighted about the whenever we talk about business, they generally just talk about the process side of it. We forget the fact that in an organization, business business, and is there are two angles to it. One is the behavior or the motion part of it, which is the process. How do we deliver it? How do we manage it? That's the process part of it. But there is a static element to business as well. That what are the capabilities? What are the abilities that we are going to possess in the organization to deliver that processes that we enable that processes that we have in the organization. And both of them are relevant for business, because if we have identified those static capabilities, we can then now look at processes as orchestration of this capability rather than a set of activities that someone needs to do in the organization. And that's the shift, in fact, in the mindset needs to happen with composability, is that we should be able to build these building blocks, and by using them, no matter what the change is thrown on us, we are able to maneuver and make the change within the organization, which is the agility to meet the ask of the time.
Awesome. So
And
one
I think even stepping, if we take a step back and even just look at processes, which obviously, that's what we've lived and breathed, right? In banking, ever since banking was established, the days where you could define a process, whether it be account opening or transaction settlement, or issuing a credit card, you define a process and let it just run and be confident that that process will hold true for the next year, the next 3 years, 5 years, 10 years. Those days are long gone, right? So I think in banking, because everything's moving to a service-based, experienced sort of industry, where you're no longer just giving a customer a loan or a deposit, or you have to give them an experience, right? The experience of buying a car, the experience of owning your first home. We've got to break away from that love of processifying everything, and instead recognize that what we design today, it's going to innovate again tomorrow, and it's going to innovate even faster the day after that. So I think there's a real mental shift that comes as you move away from processes and move towards composable architectures.
I think you're right, Nish, because one of the things that we all are evidently seeing is the launch of the fintech companies, right? So they possess a huge threat for the banks, and a lot of people are asking that, why do we need have to banks at the first place? I can still make a transaction to my thing without having a bank account. So it's going to be asking what value is banks going to do in the future, right? As we start to evolve the whole ecosystem in moving towards AI and thing, how are we going to distinguish ourselves to be staying relevant and being focused on that journey from the time it could be wealth management, it could be home loans, it could be that, but it's just one stop shop, right? And it's just gets everything together pretty much integrated to make this work, right?
Yeah.
It's very interesting to see those dynamics to do that. So one question, Mamta, is that so has someone defined a standard set of packaged business capabilities for these banks as you start to identify this?
Yeah, so good thing. The Gartner did talk about composability, but of course, Gartner was looking across the whole businesses, not just focusing on financial services industry. So yes, they did not go ahead and say, okay, for financial services industry, these should be a packaged business capability. In fact, every organization is left to themselves to identify what their capabilities are going to be. However, the good thing was that the time kind of coincided in a sense that BIAN had already identified certain sets of capabilities, which in BIAN terms is called service domains. And when we looked at the concepts of service domains and we looked at the concept of packaged business capability, realized that they actually resonate with each other very much. So literally, if we are to go back into look at BIAN and looked at the service domains, we realize that there is so much of synergies that we can actually lift and shift the concept of a service domain and probably platform it or rename it as a packaged business capabilities for financial services industry itself. The other aspect that comes with it is that what should be the right size of that packaged business capability as well, because depending on the organization, everyone might just end up deciding, I'm just going to take an origination as one of the capability. They might want to call it a packaged business capability, but what's the starting point of origination? What's the end point of origination? Some people think that origination is actually also includes the sales side of it. Other things that even the servicing is part of the origination. So there's no boundaries to that capabilities in the financial services industry. But if we are to use BIAN as the starting point to define the capabilities in the organization, it has a very well-defined boundaries of each of the service domains, and then with that, it can consistently we can map out these capabilities in the bank, and then it could become a mutually exclusive, collectively exhaustive set of package capabilities that we need to. We may not choose to build everything as a package capability today, but it gives us a roadmap of eventually we should be able to build all of our service domains as the package business capability in the financial services industry. So with that, if you move to the next slide, we kind of looked at, okay, so what were the guiding principles of defining a service domains, and what are the guiding principles of defining a composable package business capability? And they kind of very nicely aligned to each other. So BIAN had used 6 principles, which they called as their DNA for defining the service domains. And they talk about separation of concern. Says that no two service domains which is defined in the organization should have the same concern. So if I have a service domain which is talking about payment initiation, there's nothing else in the whole service domain landscape who could do the initiation of the payment except for the payment initiation service domain. So it provides that separation of concern. They also looked at encapsulation, that everything which is required to fulfill the role of the service domain should be encapsulated within the service domain itself. And both of them is almost the same as autonomy. So like it should be able to operate as autonomous service centers as the capabilities itself. Similarly, loosely coupled interoperability, which lends itself to be a modular characteristics, which composable architecture talks about. Reusability, service orientation. So there is quite a bit of synergy between the package business capability which Gartner had proposed and the service domains which are there in BIAN itself. So it is a very good starting point to lay out the architecture of your organization, especially if you're a bank, with starting with BIAN.
Okay.
And yes, just to close off that, BIAN has already identified around 327 different elemental capability, which we call as service domains. And just an extension to it, there are service operations. So if you remember, the package business capability is supposed to have an APIs, and they have supposed to have events. BIAN has already gone ahead and defined what those operations are supposed to be exposed at API, what those service operations should be exposed as events. So it is a good, good cheat sheet, if I must say, to design your enterprise. And they've gone ahead to define also the APIs, which are at the semantic level, but they can very easily be extended to as a physical APIs that you require for interoperability between these capabilities, package business capabilities. So yes, I think that's a good way to start if we were to look at designing the bank with a composable architecture.
And I think it's important for all of us who are joining in today and who are listening um, to to see that you don't need to reinvent the whole wheel. There is something that has been clearly defined as a blueprint, which probably can give you a good jump start. I call this as jump start or accelerated, where you understand, okay, what does this mean for our organization, right? So you don't need to pull in all those stuff. So you can probably pick up a couple of service domains to start with, which probably makes the most sense, and then do this in a more of an iterative manner. But just having this whole encompassing view of
Yes.
making this is a very powerful way to do that. And BIAN has done a phenomenal job of making this work. And as I understand, Mamta and Nish, that you don't need to be a BIAN member to look at these resources. You can be anybody who's interested. If you are trying to look at open banking, you're looking at what are the trends, you can still go ahead and do that. Is that right?
Oh yes, yes. The any artifact which BIAN produces, this information set, it's a exhaustive set of artifacts that they produce. Anyone can go and refer it back. You don't have to be a BIAN member to have benefit from it. In fact, we have worked with a lot of organizations who are not BIAN members. I think the only benefit when you do become a BIAN member is that you can directly reach out to and to BIAN and are able to contribute back to the model, because there are certain areas and geographies which might have a slightly different business function which BIAN may not represent at this stage. But if it is something of your relevance to the bank as a member, you can contribute back to the model, which we do expect, or we do want most and more organization to be member and contribute back, because today is the world of collaboration. Like everything gets innovation only happens by collaboration. So yes, the model is going to get more and more better if we are all contributing back to it.
Yeah, so we're getting some questions. Question from Vivek Urana. Any option to ask? Absolutely, Vivek. You can put that on the chat, and I will ask these questions to our panelists. We're going to take questions as we go through it. We also have Parthiban Krishnan from India. Thanks for joining us. So if you have any questions for anybody who joined just now or just have been listening, please put that questions and we will present it to our panelists. With that, I want to kind of look at to get Nish on board to explain us on the second pillar, which is his favorite topic on product mindset.
Absolutely. Thanks, Suresh. So I think this segues nicely into, we've talked about composable architecture, but to really take advantage of that requires nothing less than, not just a mindset shift, almost a cultural shift, right? So if you think about banks, traditionally, and this has been the case for decades, everything in a bank is a project, right? And it starts with, the bank has to tell the shareholders what they're doing every year and publish their plans in their annual report. They have to tell the regulator, what their commitments are in terms of meeting certain compliance mandates. So outwardly, banks have to be very planned. They have to really, think ahead. They have to stick to their commitments. So there's no getting away from that. That's not going to change anytime soon. However, what it does mean is that typically that sort of fixed kind of planning horizon, it ends up kind of translating internally into these very tightly planned, very tightly controlled projects. And there is a place in the world for tightly planned, tightly controlled projects when you need that certainty. However, there's a lot of things that banks are doing these days which are, highly experiential, highly customer focused, highly dynamic. You're competing with the Googles and the Apples and the Spotifys and all these kind of sort of experiences that customers can get. And to take that traditional project mindset forward really cripples the ability for a bank to digitally innovate and achieve that agility. No matter how good your composable architecture is, no matter how smart your people are, the move away from a fixed project focus into a product mindset is really crucial to unlocking that agility. So what does that look like? If you look at your typical project, and I'm sure everyone who's joined the call or who listens to this recording afterward will be nodding their heads going, yes, when I work on projects in a bank, it looks something like this, right? We initiate the project. So there's a sponsor, there's a business need, there's a set of scope and benefits that they tend to get worked out. So great, we kick it off. Then we go into this protracted planning and design phase, right? So there's weeks, months. Sometimes I've worked on a project which was in design for over 12 months, where you have to plan everything meticulously. You have to understand your scope. You have to come up with an end-to-end schedule. You have to communicate your milestones. You set your budgets. You make your commitments, and then that goes up through various steering committees and approval forums and gets green lit. And at this point, you're really well planned, right? Everyone understands the impacts, everyone understands the dependencies, and you go into that build and that implement and the close phase. Now, at this point, the first time usually that your customer gets to see and touch and feel and use the product or service that you've designed is when you implement, right? And the typical timeline for any kind of medium-sized, average-sized project in a reasonably sized bank is going to be minimum 3 to 6 months, much more likely 9 to 12. And of course, for large programs of work, you're going into multi-year transformation programs, right? So if you want the certainty, great. If you want to, predict upfront, great. If you want to meet the emerging and growing needs of your customers, not so great, right? What banks are transitioning to, and the really successful ones that are kind of at the forefront of that customer experience and digital innovation, have moved to the right. They've moved to a product focus. Instead of putting the business case at the heart of what they do, they put the customer at the heart of what they do. Instead of a linear, extended, end-to-end, very fixed, process. Let's face it, right? A project is a gigantic process. They go into these cycles, right, where the overarching goal is get something out there into the hands of the customer and get that feedback. That's the thing that drives these product-centric organizations. That's what makes them get out of bed in the morning. It's like, if I've worked on something, I want to show it to someone. I want a customer to use it, even if it's not complete. I need that feedback. I want to make it better. I want to make sure when we do a mass launch that it's going to delight the customer, right? So that's where you go into these agile cycles, right? You do your research, you do some level of planning, of course, right? You need a plan, but deliver something, right? Deliver something in a small increment. Get that feedback. The feedback is critical. Improve on it, right? Before you do the next thing. So, if you look at a few measures across culture, team, focus, lifespan, delivery, there are differences, right? In a project-focused organization, you will aim to meet your budget and schedule above all else, right? Even above, delighting the customer. Your team will be this complex matrix team with lots of handoffs. You'll have disconnected governance, different layers of governance. Your focus will be on that business case. The project will be short-lived. It'll come, it'll go, right? It doesn't last. It's not a persistent thing. And lastly, your delivery style is very waterfall. It's very has a lot of heavy upfront planning. Whereas once you make that leap into a product focus mindset, everyone in the team, regardless of what role you're working on, your goal is to make that customer really happy. Your team starts to look more like a cross-functional and empowered team. They're not made up of these dotted lines into other parts of the business and a group of people that have temporarily come together. This is a team that has all the skills, the resources, the know-how to build something of value. And of course, that focus is on the customer. and the lifespan starts to become enduring and persistent. That team can bed down, they can build their velocity, they can get efficient, they can continuously improve. And the delivery, of course, then starts to look more like agile, more like iterative delivery, right? So these are, really, really critical elements to unlock digital agility.
I think it's a great way that you put it across. When we move, organizations have to move from a project mindset to a product mindset. And it actually gives you a couple of things which are very important. The first one is about products are long lived as opposed to projects, right? So that's one other part is you are continuously invested to create that experience, right? What is good so far is not good tomorrow, right? You have to continuously evolve the quotient of value, right? So that's one part of it. The second part is around what you rightly mentioned, Nish, is about self-organizing teams, right? So as a hallmark of high-performing organizations, as we look at it, Daniel Pink says three things, right? One is a stronger purpose, right? Why are we doing this at the first place? The second one is mastery of skills, right? You have the right level of skills in terms of cross-functional skills, right? It's not about taking about your I-shaped profile. You're talking about T-shaped to pie-shaped to comb-shaped profile, so which have cross-functional skills part of it. And then the autonomy part. Because when you are self-organized with the level of mastery of skills with purpose, you will be a unstoppable team. And that requires us to make that continuous effort to make things work. And that's the part of why we are strongly emphasizing on design thinking and approaches. So one question, Nish, is that based on when organizations shift towards the product mindset, what kind of differences can they expect to see? Because traditionally they have had some success being project. Let's not ignore they've been doing this project for quite a long time. As they shift this move towards product mindset and product centric approach, what do they stand to gain? What kind of visible results would they see as they go through the journey? Because everybody wants to see what's the result look like, so that they get further invested to make that stride towards product centric approaches.
Yeah, it's a great question. Right? I mean, I'll be a bit tongue in cheek. The short answer is what they will see is they'll see more profit than they can count. Right? It's the evidence is overwhelming in terms of the organizations that have embraced that customer centricity have far outpaced their competitors in any industry, right? Not just banking. So the bottom line metric, which is the return to shareholders, the customer satisfaction, they're all through the roof. But if we look at how do you know that you've made this shift to a product centric mindset? What's a good indicator, right? If we jump to the next slide, I'll hold up a bit of a mirror, right? So for those dialed in, for those who watch this later, as we go through this, ask yourself these questions, right? And you'll get a sense of, the extent to which you've got that product mindset. It all comes down to, as we said, customer centricity, right? And if we start at kind of the 1 o'clock mark there, where it says bank when I want, all of these elements of, how do you know you're putting that customer first, right? These are elements that you think about. These are things that go into the very way you plan and the way you make decisions. So, if you think about what a customer wants, right? They want to bank when they want, right? They want the convenience of 24/7, always on banking. And by the way, one of the nice things about, when you work in a bank is every one of us is a customer, right? We might not be a customer of the bank we work in, but we are customers of a bank. And so you can shift your thinking and kind of go, well, if I forget the fact that I work in the banking industry or work for a vendor that, works for the bank, me as a customer, right? What do I want? And so banking when you want is one element. Banking how I want, right? So customers are faced with so many choices these days. You can, if you think about any experience that you have, you can engage with it through your mobile, through the phone, through lots of different ways. And so when you think about from a banking perspective, you really want to be able to offer that channel of choice and say, have I made it seamless for customers to have complete freedom in their preference of how they want to engage with the bank? Another big one is keeping me safe, right? My data, my transactions, my money, is that secure? Customers, banking is one of those industries, a bit like, hospitals and other fields, where trust is really important, right? Because customers are putting arguably some of their most precious assets with the bank that they choose to bank with, right? So their money, their data, increasingly, your own data is, banks hold a lot of data about customers. So, that safety has to be built into everything you do. But every product you release, every service you offer, customers need to feel safe when they engage with it, right? Another one is respond to me, right? Provide timely, useful help when I need it. Now, you can take that too far, right? So if you're constantly, as a bank, if you're sending messages to your customers, you're sending them new campaigns and pop-up messages on the mobile app, that might seem helpful, but all you're doing is just bombarding them you're just pushing your products and services, right? The analogy I've heard, which I think suits this best, is the silent butler. So if you think about movies, you think about those kind of in the olden days, you've got this butler kind of Oops, sorry, you guys still there?
Yeah.
Okay, I thought I lost connectivity. Yeah, you've got customers. Sorry, the butler just kind of floating in the background, silently waiting, and they only come forward when you need them, right? Your glass needs filling, or you need a top up on something. So banks need to be responsive, but when you need it, right, they step in and help out. The next one is make it easy, right? Make it easy for me. Let me get the outcome I need quickly and simply. Don't make things complicated. Another one is incentivize me to continue banking with you. So give me that value for money. And another one is my time is precious. Don't waste it, right? Get it right first time. If I am applying for something, if you have to perform some service for me, I don't want to have to come back and say, hey, you got this wrong, right? And lastly, use what you know about me to anticipate my needs and speed things up. So if I've given you my details when I first opened an account, I expect you to use those details to help me get my mortgage, or to get a personal loan, right? So these are all elements. I think if you can ask yourself these questions, right? If you work in a bank or work for a vendor that deals with banks, these are examples of things where if you're thinking about these things as you are delivering, then you are definitely moving into that customer-centric mindset.
Awesome. We have got a couple of questions coming up. Thanks, Nish, for that. The question is from Sai Kumar. How to get certified on BIAN? I'm a TOGAF enterprise architecture professional, currently working as digital transformation program manager for a bank project. Looking for a job change. Okay. Good luck on your job search. We do programs of BIAN Foundation training. We will be presenting some final slide where you will have some contact emails to get in touch with us, and we'll be happy to give you more information of the trainings for either for you as an individual or for your organization on the whole, right? So we'll communicate on that. The next question, Vivek, thanks for taking time and writing it out. So I'll read this out. Different banks have different capabilities. When we actually do analysis on business capability map, some banks come under 30% of BIAN service domains. So Mamta, this is to your point of so much domains that we have, it's about 30%. Do we have any sizing that says if business is in at least about this number, then it would be a fair case for BIAN adoption? So I think they are looking at this BIAN alignment. When will you actually look at, is BIAN even fit enough for us? And then what will you do that? And that's the first question. The second one is, do we have any spot to see all predefined processes that comes under banking operations, like fund transfer and stuff like that? So you get that part. So the first question is about 30%. When do you think that is good enough for an organization to adopt to BIAN?
Well, good question. A little bit, I would actually say 30% is probably low on the sides of the banks having the service domains aligned. We actually did an assessment, and this is again not me quoting. This was quoted last year in BIAN Summit. And when they looked at different banks and how many service domains were relevant for them, they found that 80% of the service domains were relevant for most of the bank. There obviously are changes of how you realize those service domain in a bank might be slightly different, which is their differentiator or value proposition to do that particular function in the bank. But ideally, as part of the survey, they did realize that more than 80% of the service domains were applicable for most of the banks. And I think the reason why your numbers probably coming out to be less than it's that low is it's a bit of understanding of what that service domain is meant to do. Sometimes it doesn't lend itself in terms of definition of the service domain in words. That's the function of the service domain. You need to get down a little bit more detail of what's the information set that service domain is supposed to manage. What's the behavior qualifier? I'm now literally getting into the depths of BIAN talking about these things. But Vivek, we can very well have that conversation. But the second part of your question was very interesting. Is when do you think a bank should be looking at adopting BIAN? In fact, you don't have to adopt BIAN across the whole enterprise. It's a good way to sweep out the whole of the bank and say, oh, how many business functions are aligned with BIAN. But the real benefit of adopting BIAN is probably in the areas where bank is already going through some kind of innovation change that they're looking at. Start identifying the business capabilities in those areas and just build them as a reusable package capabilities. You don't have to do it across the whole bank. In fact, we recommend, even BIAN also recommend, do not try to change the bank. Build the alignment to BIAN piece by piece. Eat the elephant one bite at a time. Don't try to go after the whole elephant in one go. You will never be successful doing that. But yeah, we can have more discussion around what's the right way to adopt BIAN. The second question, if I have to read the question again, is do we have a spot to see predefined processes that comes under the banking operations? Yes, in the BIAN artifact, there is something what we call as business scenario. They are not exhaustive because each, as we were talking earlier, the business process that a bank might have might be different for each of the bank. However, what BIAN does provide is a set of typical way that you would have to orchestrate. And again, I'm not saying business process, I'm saying orchestrating these service domains, which is the capabilities, to achieve a different outcome, because every bank might choose to orchestrate it slightly different, but they might want to achieve the same outcome to do that. So yes, there are that information available on BIAN, and we will be more than happy to navigate you through how do you get to that information in BIAN repository, which is available for everyone to use.
Awesome. The other question is from Rajendra Kashi. In our bank that we are adopting BIAN, we notice some of the service domain is missing. So we are deriving on our own. We have difficulty to identify which is right functional pattern, generics and behavioral qualifiers. Can you detail some of those?
Oh, yes. So I think that's definitely a very long conversation, Rajendra. I think we will be more than happy to work with you, give you an indication of how to go about extending. Yes, it is sometimes can be a little bit tricky to understand what the right functional pattern and behavior qualifier should be and how do you extend them. But yes, take an example. There have been scenarios where we've realized some of the service domains have been missing in BIAN just because our industry itself is evolving. So obviously to manage that, we may have to build some service domain. And in some cases, we have also realized that it should not be a service domain. It should be a behavior qualifier within one of the existing service domains. And there are pros and cons of how do you go about modeling that aspect as well. So Rajendra, definitely more than happy to have a conversation on it, on this. There are set of principles, guidelines that you should be following when you're doing that. And we can walk you through that.
Right. Let's go on to our next thing, if Nish, you're ready, on the whole objective of that product mindset, and how that can be articulated in the way we work.
For sure, and sorry about the drop off earlier. Had some power issues, so hopefully I'm coming across clearly. So another way to kind of really take advantage of the product-centric thinking and customer centricity, as I mentioned earlier, is you want to get things into the hands of your customers as quickly as possible, right? There's everyone on the call would have definitely heard of the concept of an MVP, a minimum viable product, and sort of building on from there, right? Get something done quickly and validate it, and then build on. And that concept's been around for a very long time. Where BIAN really helps unlock that is because it's a composable architecture, and you're dealing with a set of business capabilities. You can assemble these in a way that allows you to define that MVP, draw the boundary around that, get something to market, and then assemble more business capabilities over time to go from that sort of core product into a more complete product, into your kind of final product. And a good example of this is if you are doing, say, a new personal loan product, right, under the borrow money value stream. There are going to be a core set of capabilities you need to have to even just have a working product, and you might want to be testing, say, your origination and sort of the experience of a customer applying for it. So you might say, okay, we need a customer offer capability, a product directory, a party management capability, document services, and of course the consumer loan service domain as well. But that's all we really need, right? There's that alone is enough for us to really validate that user experience is going to be the one we think is going to be the market killer. You might then say, well, we need some kind of underwriting capability. But you don't necessarily need to build that out fully to begin with. You can stub that. You can just use a basic set of underwriting rules. You might only be releasing this MVP to a minimum set of customers or people that you've already established as having a good credit rating. So don't spend the extra weeks and months building that piece out. Instead, go with your MVP, stub out the pieces you don't need, and then once you validated the proposition and you know that there's a business case here, there's a demand here, the product is actually going to be used in the way you think it is, you can go off and build that, the underwriting capability, and that gets you to what we call a core product. And then, of course, down the line, you've got to do your fraud. You might want to issue a credit card against that personal loan. So the beauty of BIAN is that composability allows you to really define MVPs in a way that it was very hard to do before in sort of monolithic architectures. A great example that we use when we talk to clients is there's a famous shoe store, Zappos, right? I think they got bought by Amazon. They started in the 90s, and they were the first shoe store. The founder, he was a software engineer. He wanted to buy a pair of shoes, and it was out of stock at his local store. So he thought, why do we have this situation, right? I'm going to sell shoes online. But he wasn't sure whether people would buy shoes online. So rather than spending a ton of money, getting venture capital or mortgaging his house to build inventory and to create a fulfillment system and an online payment gateway and a website with a digital front end, he did something very simple. He just put up a simple website. He took pictures of shoes. You could order the shoe on the website, but as soon as the order came in, he would go off to the local store and buy the shoe in that size and color, and then he would ship it to the customer himself. So behind the scenes, it was all smoke and mirrors, right? But what it allowed him to do was very cheaply and very quickly validate the really important hypothesis: will people buy shoes online? And by doing it this way, he could get very, very confident that there was demand and spending very little money and getting to market very, very quickly. So that mindset of get something simple out there, get the feedback, very, very powerful. And BIAN really allows banks, if they use it as their kind of composable architecture, to define these MVPs very clearly, and then have a roadmap and a plan for how you build that out into more fully featured products down the line.
That's great. I think I love the anecdote in terms of you being a part of it. As a business owner, it is not about that. The people will take it about it. Every day you go there in person to do that, and you find out, do the customers really care about your product, right? And you have to do it by yourself. And I'm seeing off late leaders going on that. So a couple of questions coming up, Nish. Nish and Mamta, right? What is the plan for cross-border trade from banking services? How will it be helpful for supply chain service provider? That's a question from Parthiban Krishnan.
Yeah, Nish, do you want to talk about the supply chain finance that you were investigating today?
Yes, I was just trying to look up the documentation on it. Look, the short answer is there are some service domains that already facilitate elements of this. I will say that in terms of the depth and completeness of BIAN, it's very, very full featured and matured on the retail banking side. When you get into that corporate and institutional banking and you get into things like supply finance, there's enough defined there to get started. There is probably more that needs to be elaborated as a customer when you adopt it, which can mature it and then can actually be contributed back to the framework if you're a member. But we've actually recently begun looking into this for another client of ours, and so it is there is some capability. It has started to get looked at and started to get elaborated. There is probably some amount of work that needs to get done when you pick that up and want to implement something yourself.
I think that's the whole point, right? Because that's the only point that we at CCNC Solutions can help in the journey, because it's not always fully transparent and visible. So probably with our experience, we can bring that perspective on helping and supporting that overall journey. Go ahead,
Yeah,
Mamta.
I was just going to add, I think in specifically in BIAN terms, some of the service domains that they have identified already, service domains are already there. What nuances which is missing is what are the behavior qualifier, which actually flushes out the functionality of the service domains more exhaustively. Though there are some that have been identified, but I'm sure there are more that they needs to be added. So definitely that's an area of interest. There is a potential to contribute back, and we'll be more than happy to work with you to talk about how it can be extended.
Yeah, one more question.
And probably, I was just going to say one of the things with supply chain finance is a key element of it is the integration into that intermediary third party fintech platform, right, where the transactions are being settled. So both the remitting bank and the buying bank, they have to connect into that third party platform. And one thing that BIAN has made much easier is those industry standard sort of ways to connect to do payments and to do securing exchange of customer information and things like that. So absolutely worth looking into using BIAN for that.
Yeah.
So I think we have about 4 minutes time, so we'll go into quickly on the agile methodology and then open up. There's a couple of questions that's coming up.
Yeah,
so you
sure.
want to kind of wrap that up on.
And look, I can be reasonably quick on this one. I'm conscious we are running short on time. The third pillar, which is around agile methodology, is really about, as we said, once you've kind of got your composable architecture, once you've got your product-centric mindset, the way in which you then operationalize the planning and delivery of these capabilities, right? These building blocks needs to be sort of embraced by the organization holistically, right? It's as much a cultural thing as it is anything else. And so what we see in terms of that ideal target state from an agile methodology perspective is being really clear on your value streams. So simple ones are I want to join the bank, or I want to borrow money, or I want to make a transaction. These can be mapped very clearly into your supporting business capabilities or service domains. Building a comprehensive business object model underneath it, alongside it, so that you can very quickly identify where is the data, what's the source of truth. These are all elements of starting to change the way you sort of go about identifying, what's the highest value item to deliver, what's the quickest way to deliver it. That sort of DNA has to get woven into your methodology from start to finish. So that is, that's probably the essence of it, given the amount of time we have.
Right.
Yeah.
Thanks. So there's a question from Arshad Tanveer. How does regulatory pressures impact enterprise architecture and specifically BIAN implementation, especially for large multinational banks that operate across countries?
Yep. I'll start, and Nish, you can add to it. And I think I should. I find, in my personal opinion, and I am sure a lot of will agree to it, the benefit of just the basic benefit of BIAN linked or overlaid, the BIAN landscape overlaid across the geography provides an incredible benefit to it. And this is coming from my personal experience. We were working in one of the banks which was across 14 different geographies. Each of those geographies would have their own stack altogether, and they were obviously regulatory requirement, but there was never a clear line of sight of which business functions are impacted by each of the regulator or geographical regulatory policies. As a result of that, every country had the whole ecosystem of all functionality rebuilt in most of the cases. So I think the initial benefit of just being able to rationalize and have a clear sight of what regulatory policies link back to which business function and hence what technologies are supporting that, that's a very good outcome for the bank. And then reusability, like how do we reusable these business functions, service domains for different geographies? And as you drill down, you realize that, and especially including the fact that banks are now becoming more of an IT shop. So they're building their own technology rather than procuring vendor products in a lot of cases. Then they are able to architect their capabilities, which could be reused across geographies as well. So definitely there is a merit and benefit of adopting BIAN across in a bigger organizations. In fact, most we were having these controversial discussions up until 2 years back. BIAN's opinion was most of the bigger banks are the one who going to adopt BIAN to reduce their complexity in the bigger banks. In fact, it's only recently that smaller banks have started adopting more aggressively BIAN in their own organization. So the benefit actually is it's definitely easy and much bigger when it has been adopted in a bigger organization, which are across different geographies.
Right. A final slide to just check. Anish, you want to kind of tell us
Yeah,
about
look,
what are the next steps? Where do people go if they are very keen to
absolutely.
go and engage with us?
For sure. Look, BIAN is really mature. It's getting adopted across the industry. However, it's sometimes hard to know where to start. And so, if whether you're an individual or organization, the same principles sort of apply. First educate yourself, understand what BIAN is. We can come in and do team skill uplift. So we have an extensive training program for BIAN for architects, business analysts, business architects, product owners. So the first step is really just get everyone's skill level up, and then get those business cases right for what BIAN use case do you want to adopt. So again, we can come in, meet with your senior leadership, understand your priorities, and then where BIAN can best help, and start to get that business buy-in, and then of course moving into some kind of a discovery phase to keep it agile. Bite off a piece. Let's do an MVP. So we can help through the entire cycle of that, and we work extensively with banks pretty much on every continent except Antarctica. So get in touch with us. We can absolutely get you started.
Awesome. If you just join and let's provide us the feedback, we really thank everyone for your time to be there. As Nish said, if you have any further questions, you can reach out to us at info@ccncsolutions.com. One of us will pick it up. As part of heading global sales and marketing for CCNC Solutions, we're extremely glad to kind of drive these programs for knowledge sharing to the community because we think that there is so much we could contribute back to the community. We are going to be at the FinTech Festival. If you are in Singapore, we're going to be in FinTech Festival in November. Mamta is going to be there, and we are also going to be there as part of a BIAN conference, which is going to be in London, 19th and 20th of November. So just to give a heads up that we will be there everywhere BIAN is there. So hopefully, if you have an opportunity for us to meet you, share some experiences, or even connect with you to answer some of more questions, we'd be more than happy to do that. Thank you so much to the panelists. Thank you so much to the people who took time for being on a Thursday, busy Thursday, for an hour. Thanks so much, Nish and Mamta, for sharing your valuable insights. I'm sure that this would be of enough amount of value for the people. And if you need to know more, please do reach out to us. We will put the links and we'll be more than happy to have a follow-up call. Thank you so much, everyone, and have a great rest of the day.
Fantastic.
Thank you.
Thanks, Suresh. Thanks, everyone.